Hello, John here, your friendly remote CPA. I'm doing a video series on empowering you to use QuickBooks Online. So maybe you have advanced QuickBooks knowledge, which is great, or maybe you're starting from the basics. In this series, we're going to assume that you're starting from the basics. So feel free to fast forward, speed up, and skip the parts that you already know. In the first lesson, we're going to talk about expenditures. And as you can see, I've got the sample QuickBooks Online file up. I would never use any live client data on any video. So let's check out Craig's Design and Landscaping Services. Over time, these menus are going to start to vary quite a bit. Just across the clients that I work in, this black bar is changing quite a bit and it varies from client to client. So don't freak out if this isn't exactly how your QuickBooks Online file looks. They're rolling out new features to a small number of clients at a time. We've got a mix of new and old. This part over here is updated, but compared to another client that I was just working in, this is not updated. So you can switch over to the business overview. I honestly don't find this tab to be all that helpful. It was a throwback to QuickBooks Desktop. They had that flow chart when you logged into the desktop version. So it is what it is. I usually flip over to the business overview, and depending on where we're at in the month end close, this may or may not be helpful. It's good to know that sometimes you can change the time period. So like this profit and loss, if we haven't finished closing the books for the month yet, you could do, another time frame that is more accurate. But anyway, so today we're going to focus on expenditures. And I want to start out by talking about what constitutes a business expense. Great question. So the IRS defines a business expense or a deduction as something that's ordinary and necessary. So that leaves a lot of subjectivity, just a lot of room for interpretation. And as you can imagine, there's a lot of aggressive taxpayers who have tried to, take advantage of the system. Here at Remote CPA, we don't encourage that. We take a middle of the road approach. We look at tax cases and we make sure that the deductions that we're taking are legit. We really don't want to spend a lot of time in litigation. So there is no hard and fast answer though for what is a business expense. If you are spending money in order to make money, chances are it is a business expense, but it can get really tricky. Mileage deduction, for example, the miles that you spend commuting to and from work are never deductible. However, if you have multiple locations or if you leave your office to go to a job site, those miles would be deductible. Travel. So let's think about the classic vacation example where you booked a conference in Las Vegas and you're going to stick around after the conference to have a personal vacation. If 50% of your time is spent on work, chances are a lot of it's going to be deductible. But these are also things that we need to talk through on a one-by-one basis because every situation could differ. So don't take this as an ultimate tax guide, and we would be happy to discuss this with you during one of our routine meetings. Let's talk about the difference between an expense and a bill in QuickBooks. So if we go up to the new button over here in the top left, we have a few different ways that we can enter expenses, outgoing cash, and most of them are listed under the vendors section here. So we have expense, check, bill, we can pay bills, we can do a purchase order, we can record a vendor credit, we can do a credit card credit, and we can even print checks. So let's expand on these on a one-by-one basis. So starting with expense, this would be recording cash that's already gone out the door. Great example would be you go to Home Depot, you swipe your debit card or your credit card, After the fact, you can come in here and record it as an expense. And the day that you put on that expense, that's the day that it's going to hit your QuickBooks. QuickBooks is going to assume that it was a cash transaction and the funds are out the door. Next, we have check. We're seeing fewer and fewer checks. They're a little bit old-fashioned. They're highly prone to fraud. If you mail checks with a routing and account number at the bottom, I pray for you, because there are more and more cases of these checks getting stolen. There was an article recently saying that the USPS is going to be changing the lock on all of the blue mailboxes, or I guess they're rolling it out in target areas first. So the areas that are most at risk, they're going to be changing the lock on the blue mailboxes, because up until now, I guess all blue mailboxes just had a standard key. So, you know, and an audit, surprise, surprise, an audit of the USPS found that they had lost control over who has these keys. So if you drop a check in one of these blue mailboxes, there is the possibility that someone could get in there, steal that envelope, and the technology has improved so much that thieves can actually wash off the ink on your check and rewrite it. And a lot of times they won't even write it for a great big amount at first. They will do like a trial transaction that might only be a small amount, and then later they go in for the kill when they realize that the account is active and you didn't notice, and that's when they try to steal tens of thousands of dollars. But there is some hope for those who want to continue using paper checks. There are services like Bill.com that will mail a check on your behalf, and they use a spoof routing and account number at the bottom of the check. And so if that check is stolen, it's Bill.com that deals with the theft and not you. The other thing that most people don't realize is banks don't offer the same level of fraud protection as credit cards. So in most cases, it's not even required that your bank reimburse you for fraudulent charges from stolen checks, which is way different from credit cards. A lot of people get confused and think that those policies are the same between credit cards and check transactions and ACH. They think there's some level of fraud protection there, but that's actually not really the case. A lot of banks will reimburse you for those fraudulent transactions, but that's just out of goodwill, and they theoretically have the right to deny your claim. Moving on, let's talk about what a bill is. So a bill is something that comes in from a subcontractor or a vendor, and it's a document that says, hey, you owe X number of dollars due by such and such date. It could be due upon receipt. It could be net 15. It could be net 30. It is a transaction that has to get paid later on down the road. And the reason we want to enter it as a bill is because it goes into accounts payable, and then say at the end of every week, maybe on Fridays, you look at your accounts payable, you look at how much cash you have in the bank, and you can leverage your cash situation and arrange the timing of those bill payments so that you're not throwing your bank account negative, but you want to enter it as a bill because you want to see the accounts payable. After things are entered as a bill and they're sitting in accounts payable, you can come in here to this function of pay bills, and it will give you an itemized list of all of your bills, and you can click the ones that you want to pay. And QuickBooks is even smart enough to print multiple bills on one check if it's going to the same vendor. Then we have purchase order, which is different from a purchase order in Buildertrend. I would recommend you use the purchase order feature in Buildertrend if you are going to use the purchase order function. A lot of people think that the purchase order functionality has to be really super complicated, but that's not the case. I even recommend that if you're working with a vendor who accepts purchase orders, maybe just give them the cost code as the purchase order number. And so that way, when the bill comes into us, the accounting department, we see that cost code and that purchase order number, and we know exactly where you want that bill booked. Then we have vendor credit. So this could be a case of one of your subs or vendors overbilled you, the bill that they sent you was too high, it included things that you didn't receive, or that pesky situation when we want to do a back charge to a sub, maybe there was some rework, maybe the so-and-so came in and accidentally destroyed a light fixture when they were carrying out their portion of the project, and you need to back charge that to them. The vendor credit is the perfect example there. Credit card credit, it seems like it would be really useful, but I rarely use it. It would be maybe a return at Home Depot. But let's click into this real quick. I don't think it includes anything for, okay, no, it does. So you can enter your product and service here, which will sync to Builder Trend, I think. Or I think in this case, it's actually best if you go into Builder Trend and enter a negative bill. From what I remember, anytime you enter a vendor credit or a credit card credit in QuickBooks, unfortunately, it will not sync to Builder Trend. So I highly recommend, if you're going to leverage any kind of credit, go to Builder Trend and enter a negative bill, and it will miraculously sync to QuickBooks as the proper transaction, either a vendor credit or credit card credit. And then after you've got your AP set for the week, you can come in here to print checks, and you can select the ones that you want to print, and you can do a check run all at once. So you're not running checks one by one. But once again, we're going to do a plug for Bill.com because that's our preferred payment processor. You can still use this functionality even when you use Bill.com, but if you just go into Bill.com and pay your bills from there, they will automatically be marked as paid and grouped together. So that's probably an easier solution. Let's talk about the fastest way to enter some of these expenses and bills, because if you're like most of our clients, these are coming in by the dozens every week. So could you imagine coming in here and clicking bill every time a subcontractor submits a bill to you? Honestly, it's a huge waste of time. A lot of these fields can be filled out quite a bit faster through a spreadsheet. So we use something called Airtable that allows us to set up a spreadsheet upload file, and it has the bill number, the vendor name, the bill date, the due date, the terms, and then it lets us fill out things like the expense category, if it is a fixed expense, or if it's warranty, or if it's something that's not traceable directly to a job, we'll use that expense category. And then further to the right, we have a product and service item detail. So we can choose from the cost codes, we can add a description, we can put in the amount, and we can even attach that bill attachment right in Airtable. And then we also track things like, has it been approved? Has it already been uploaded? If it has been uploaded, what date was it uploaded? And then we can download that Airtable file to a CSV. And then we use SASANT to upload in bulk. So every time we do the weekly AP presentation, we do one upload usually on Thursday to present AP on Friday, so we can do our check run on Friday. So I know that's a complicated process, but overall, I just want to highlight that there are faster ways to get expenses and bills into QuickBooks. Also in Builder Trend, there's the new cost inbox, which is great. It can help you enter POs and bills a lot faster into Builder Trend, and then they push into QuickBooks. However, I caution you from using things that you enter on a one-by-one basis. Even with expenses. So say you have a corporate card and you have different cards assigned to different employees and you require them to submit receipts. We have an email address called receipts@remotecpa.com. You can email them there. We also use an app called Dext where you can download it on your phone, and as soon as you buy something, you just snap a picture of the receipt and it immediately uploads into an inbox that we process. In a lot of cases, we can publish from Dext for fixed expenses, not so much items with cost codes, but we don't mind for the clients who are on the CFO plan, we don't mind downloading those receipts one by one and doing a bulk upload. But once again, there's just faster ways to get things into QuickBooks Online. That's the beauty of the cloud atmosphere. You can get things in here through a multitude of ways. You can connect different apps, and it's always improving. So who knows what could come from AI down the road. If push comes to shove, we can actually do a CSV export of bank activity, and then we can just code those transactions in a file. And even if you don't want to go through all the headache of Airtable and Sassant, you can come in here. A lot of people don't know this, but where you go for your banking and your bank feeds to categorize transactions, you can come over here to link account, and you're not going to link an account at the bank. You're actually going to choose the drop down, and you're going to upload from file. And you just have to have date, description, and amount. You can do spent or received in 2 different columns in that CSV upload, or you can have it one column and designate between positive and negative numbers. And I think even when you go into upload the file, it used to give you a template. It might not anymore, but the template is easy. You know, you can make it with a maximum of 4 columns. So let's elaborate a little bit more. What is the best way to track receipts? So as a general rule, I really do recommend people keep digital copies of their receipts. We've all had that heat sensitive paper, and after a year or so, it just fades to blank. And guess what? The IRS is usually, 2 or 3 years behind on their audit queue. So by the time the IRS gets back to you and says you're under examination, you might go to your trusty shoebox, and all of those receipts in there are blank, which would be horrible because that is your documentation. So that's why it's so critical to use something like Dext, where you can snap a picture of it. QuickBooks does have a receipt function in here. I have tried so hard to use it, but it has just too many steps. So you can even use Google Drive on your phone, and you can hit the plus button in the bottom right, and you can snap images of receipts on the spot. The most important thing is being consistent. So choose a receipt management tool that works for you, someplace where all of your receipts are going to go. Choose a good place, a consistent place. Take pictures of the receipts, because IRS tax cases show that digital records are sufficient, and in the case of the heat sensitive paper, they're actually preferred because they don't fade. Technically, bank activity, can be sufficient for tax deductions because the bank validates that these transactions took place. Just make sure that you're using separate accounts between business and personal. That could be a big problem. Try to keep your receipts. Then let's talk about prepaid expenses. These are a little less common. I don't know so QuickBooks usually does come with a prepaid expense account, and a lot of people get confused because it's actually the account type of other current assets. So think about IT contracts or insurance contracts where you might pay a year in advance for services, and you haven't used those services. And this is especially important if you're eligible for a refund if you cancel. Say you buy an IT contract that gives you monthly service for the next 12 months, you can go ahead and put that total cost in this prepaid expense. It will show up as another current asset on your balance sheet. And then what I would do is I would do monthly journal entries to expense that as it is used up. So as it's used, you're no longer eligible to receive a refund for the service that you've used. And it spreads out the expense so you have a more clear picture of what your true trending P&L is. Like if you book a huge expense all in one month, it might throw you into a loss for that month, and it just looks really ugly. So prepaid expenses can be leveraged to kind of smooth over that P&L, and it's actually the preferred method under US GAAP for those who want to master full accrual accounting. Let's talk about when to use uncategorized expense or ask my accountant. So in here, we have uncategorized asset, uncategorized income, uncategorized expense. I caution you on this uncategorized asset. It seems like QuickBooks loves to suggest this in the bank feed. Don't do it, don't do it, don't do it. If you're going to book anything to uncategorized, please book it to income or expense, because you're more likely to see it on the P&L. And even if you don't know what it is, it will factor into your bottom line. So if you're going to evaluate your profitability, it's better to, you're going to go to that P&L report and you want that uncategorized transaction factored into that activity. And if it truly does belong on the balance sheet, we can reclassify it later. But a lot of people will book things to uncategorized asset at the suggestion of QuickBooks bank feeds, and then they have a false sense of what their actual P&L is. And within the QuickBooks chart of accounts, I guess they got rid of Ask My Accountant. It used to be a standard account, but it's great for a transaction that, if you are doing your own bookkeeping, you're in here, you purchase something, you're not sure what it should be used for, you can use that account and then talk through that transaction later with your accountant. Let's talk about payroll. So QuickBooks has the functionality of payroll, and the only reason I'm touching on this is because payroll is technically an expense. At this point, we've pretty much switched to Gusto. That's our preferred payroll provider, just because they have a really nice full service product and it integrates with QuickBooks nicely, all of the payroll posts there. But you can use QuickBooks Payroll, especially if you're just getting started. It will also post automatically. Here's where you would go to set it up. It's probably best to reach out to them to get started, but it is an expense and it can live directly here in QuickBooks. Finally, let's talk about an owner draw. So if you're just getting started as a home builder and you haven't set up your LLC yet, and you're just doing this as a sole proprietor, or even if you have set up your LLC and you're the sole member owner, you're going to want to pay yourself with owner's draws. So if we go over here to reports, big companies, the owner gets a paycheck and a W-2, and it all shows up here under payroll expense. I think the sample file, let's see, do they have any payroll? I guess it should be here somewhere, but my Control F isn't working great today. But if you are, I'm sorry, it's over here on the left. If you are a sole member LLC, the required, not recommended, the required way that you pay yourself is actually by doing an owner's draw. So instead of it showing up on payroll expense on the P&L, it shows up on your balance sheet. So over here in the equity section, there's usually a section for you to record your distributions. You can also record it as a shareholder note payable. So if you contributed your personal money into the business to get it started, you might classify that as a loan to yourself, so that when you repay yourself, the tax impact might be a little better. But we come across people every now and then who set themselves up as a sole prop or a sole member LLC, and they get signed up with a payroll provider, and that payroll provider wants to sell them payroll. So they just get them worked into the system. They process all of those withholdings, Social Security, Medicare, everything, and then come to find out that person was never supposed to be on payroll to begin with. They were supposed to get an owner's draw. So in order to record the owner's draw, I would either do a transfer or a journal entry. When you do the owner's draw, it's going to be a credit to cash, debit to whatever equity or liability account you choose. you can technically do a transfer. It will be transfer from whatever checking or cash account you're using to your distribution account. Last point, the thing to watch out with for an owner's draw, and this is where my heart goes out to all of the custom home builders. When you do an owner's draw, it doesn't show up as total expense. So some clients have a false sense of a high net income, but they forget that they need to factor their own time into their cost. So this is probably a pretty good example, this profit and loss. We've got some income up here. We've got net income, and it's probably a sole proprietor here because there's nothing in expenses for payroll. And so if you think about it, this business owner is only getting $1,500 for the month. I can't think of very many business owners whose time is worth $1,500 or less for the month. So as you record those owner draws, just be mindful of how much your time costs. Make sure that you're passing that on to your customers. And that gets into another topic of the legal entity, which I've already touched on in a blog post. So if you haven't checked out the Remote CPA blog, head over to the Remote CPA website and read that post about how to select your legal entity. Even if you start as a sole member LLC, you can make an S Corp election later on, which is great because then you can put yourself on payroll and you can start factoring that cost of your payroll into your P&L, and then you can get a true picture of your profit at the end of the month. So if you've made it this far, thanks for watching. I hope this has been helpful as you get into QuickBooks, and look for more videos like this to come about different topics and how you can master QuickBooks Online. Have a great day.